What's up, everybody, and welcome back to the channel. This is going to be episode 2. If you haven't already, you should go and check out the intro video where I kind of explain the whole reasoning behind the MF1 channel. So I think for episode 2, the best place to kind of start after doing the intro would be to give you a portfolio reveal, to kind of go through my full M1 account, show you all the slices, all the sectors, all the holdings, and just give you a general overview of why I have the account. And in the future, we can probably go into slice by slice and explain why I have the holdings I have in there. But for now, I just want to do a little quick show and tell. With that said, let's jump into it. Okay, so here's my dividend and dividend growth portfolio. Before we get into the actual portfolio reveal, I'm just going to quickly tell you kind of how M1 Finance is set up and how it's a little bit different from some of the other brokerages. So the first thing is pretty much everything you do through M1 Finance is going to be through a pie, right? All your investments are going to be through a pie, which is kind of what you're seeing on the screen right here. And your pie can either be, pre-made ones that you just then invest money into, or you can create your own, which is what I've done here. And the slices of the pie can either be individual holdings, EFTs, bonds, etc., or you can make your own slices, which have individual holdings in them themselves, and then combine a bunch of slices to make your pie. And that's actually the way I have it set up here. The only real limitation to this is at the max, you can have 100 holdings. They do not let you have more than 100 holdings in one pie itself. So if you wanted to have more than 100 holdings, you would have to create another account separate from this one. So that is the claim to fame is the pie investing. I'd say the other two things that kind of set M1 apart from a standard brokerage would be that it's kind of an auto invest. Not necessarily because you can turn it off, but there's auto invest, so you can set a minimum balance where any money that's in your account will automatically invest. I believe the minimum that you could set it to is $25. But you could, set it to a number, and then anytime your cash balance goes above that, be it from dividends or deposits, it'll automatically invest in the next trade window. So that's a kind of a unique thing that you don't see in a standard brokerage. And along those lines is kind of, I would say, automatic kind of rebalancing, but without really selling stocks. So you set percentages, as you can kind of see down here, for what you want your stocks, what kind of allocation you want for your stocks or sectors or slices or however you want to set up your account. And M1 Finance will invest your deposit money or dividends based on those percentages. Now, if one sector does really hot and is doing over your allocation, like here for me, real estate, right, is 11.1 right now, and my target is 11%. Basically, the next time you go to invest money, M1 Finance is automatically going to buy your holdings in your account that are undervalued at the moment, instead of ones that have run up. So you'll be buying to always kind of hit the targets or get back in line with the targets. So in a way, it kind of auto balances your account as you continue to invest. The last thing I will say that's kind of unique to M1 Finance, though again, more and more brokerages are starting to do this, is fractional share ownership. So what that means is, if in a typical brokerage, if I had an account and I wanted to have 100 different holdings off the bat, I'd have to buy at least one share of 100 different companies. Here, my portfolio is made up of 100 holdings, but I don't have to buy 100 shares. It'll buy a fractional or percentage of a stock, of one share of a stock, and I can hold that in the account. So, for example, if a stock is $20, but I only have $10 to invest, I will get half a share, right? 0.5 of a share. Which is a unique way to get your fingers into all these different companies early on, without having to have a ton of capital up front. So those are the three kind of, I think, unique features of M1 Finance. And if you would like to have a more in-depth video about M1 Finance just in general and not my portfolio, just leave a comment below and I can do that, and I can walk you through a whole setup of an account. But just I'll keep it at that for now so we can kind of get into the portfolio reveal itself. So before I guess go through and walk you through all the different sectors here that I have, or what they call slices, I'll just give you a brief overview of how this account is kind of set up. So as you can see here, the account was set up in April of last year, towards the end of April, and right now has $6,000 in it. The account is an individual account, so it is a taxable account. It is not my only account, but it'll be the focus of this channel, because this channel is focused on dividend investing, and as you can see here, this account is focused on dividends. So like I said, it is a taxable account. The goal of the account, I would say for right now, short-term goal is to be able to achieve $1,000 a month in dividends, so $12,000 a year in dividend income. I don't think that's going to happen overnight. It's not going to happen in a year. It's not going to happen in 2 years, but that's the goal. So that's what we'll be walking towards, right? Slowly. This isn't a get rich quick portfolio. The second thing is the structure of the portfolio, as far as deposits into the account. I kind of alluded to this in the intro, but basically this account is set up that every 2 weeks a deposit is made into the account. The initial deposit last year in 2020 was $250 every 2 weeks, which works out to roughly $500 a month, a little bit more because every 2 weeks you have 26 payments over the course of the year. And then coming into the new year, the basic goal that I'm trying to stick through with this account is to increase the deposit by 5% every year. So now that we're in 2021, the deposits will now be 5% more than $250. So every 2 weeks, you'll see a deposit of $262.50. If I did the math right. That'll be what will go in the account this year. And that's the only money that'll be invested in this account, other than the reinvestment of dividends that come along with it, or any sales, obviously, of stocks that I do that will then get reinvested in the account. So that's just the general overview of everything. So I guess let's do the reveal. Let's get into it. Okay, so starting with the portfolio itself, the basic breakdown, or what I'm looking to do, is touch every sector of this stock market. So I don't want to be heavily concentrated in only one area. And you can kind of see that here by looking at my slices, or the pie, right? So you can see I'm touching pretty much every sector there is. If you compare this with the S&P 500 and how they break out the sectors, they have a couple more breakouts, but essentially I'm just combining some of mine, but it pretty much mimics the different sectors that they have. And I can just pull up the S&P 500 kind of sector allocation real quick to give you an idea of how I match up. And you'll see that here on the screen, right? Sector breakdown. They have a few more sectors than I do, but it's just because I'm combining some of them. So they have consumer staples and consumer discretionary, which I just call consumer goods. And the same goes for energy, utilities. I'm putting together with also communication services, which they're looking at a little different, and our definitions are a little different as well. But in general, I want to touch the entire market, which is what the S&P 500 sort of does itself. The reason I just don't use a EFT that tracks the S&P 500 is I don't particularly like the allocation that they have here, and also because I'm based on a dividend, right, is my goal of the account. The S&P 500 is going to have a bunch of companies in here that don't pay a dividend, so they don't really apply to what I'm looking to do with the account from M1 Finance. And also I can show you, for example, right here, the Infotech, right, they're at 27%, so they're heavily weighted in technology. And if you look at the top 10 holdings that they have, right, Apple, Microsoft, Amazon, Facebook, and then you get into kind of Tesla, Google, JP Morgan. So I do own some of these, right? But I don't own ones that don't pay dividends, like Google, Tesla, Facebook, and Amazon. So it wouldn't make sense for me to own a EFT that follows the market that has holdings in it that don't apply to what I'm looking to do. So that's kind of the reason I decided to make my own pie. That even though it's going to kind of track the general market. Um, so that's just a general overview of the account. Now, going through the reveal, I'm going to walk through all these different slices really quick, and you can pause, I guess, the video and see the different holdings in general. But I don't want this video to be 20 minutes long, so I'm going to walk through it really quick. I'm not going to touch on every single stock that's in each different slice or sector, but I'll show you it. You can take a look at it. Like I said, you can pause the screen, and in the future, I can do videos on each different slice and why I picked each company, and I can even do videos on each company. But again, this is just a quick portfolio review and reveal. So let's just walk through these different slices real quick. So the first one, and my biggest at 15%, is technology. The reason I have technology higher than some of the rest is because I do think that it's going to have bigger potential for growth. And because it's going to grow more, I want it to be a higher percentage. But also, even though they probably pay a smaller percentage on the yield for the dividend right now, their growth rate on the dividends will be higher in general. And again, that's something I can talk about in another video. Here, I just want to give you a quick reveal. So this is the entire technology slice. As I said, right, I got Microsoft and Apple. But I also have other companies in there, some semiconductors, Avgo, right, Texas Instrument. So in general, they've done pretty well for me so far. You can see there's a few that are over 100% gain already. Though you don't take unrealized gains to mean anything yet. It's the portfolio is young, so what goes up can go down, and what goes down can go up. So I'm looking for income dividend returns, not capital gains. Okay, second is industrials. So industrials, you're gonna find your 3Ms, right? Your Black and Deckers, Caterpillar, Granger. I threw Waste Management in there. They're kind of an industrial company, right? They pick up your garbage and they do things with garbage, but I think they kind of fit in this sector the best. Granger's I have in there as well. So this is the industrials. The next on the list is healthcare. Here you're going to find your pharmaceutical companies, right? Pfizer, Johnson & Johnson, Merck. You're going to see medical supply companies, right? Stryker, Beckett Dickinson. But in general, a pretty good overview of your healthcare. I don't have any insurers in here, but I do have them in the financial part, but we'll get to that in a minute. So that is healthcare. Next, consumer goods. I believe this is actually the biggest slice, or has the most holdings, not necessarily biggest in dollar value, but has the most holdings in it. And this is where I kind of combine, right, consumer discretionary with consumer staples. So, it's a little bit bigger than just what you would see if it was broken into two. But you got your big name, Coca-Cola, General Mills, Costco, right, Unilever, Pepsi, P&G, and you got your Home Depot and Lowe's. So I think a lot of these companies are solid, not high growth companies, but definitely solid, stable companies that pay good dividends in good times and bad. Telecom utilities. Here you're going to find your Verizons, AT&Ts. I have some water companies, some natural gas companies, power companies. There's the holdings for this. Financials. You'll see major banks, JP Morgan, Bank of America. I do have some Canadian banks. They're pretty well regulated, pay pretty good dividend yields. So I don't mind having a few of them in the account. Some insurance companies. You got your Visa and your MasterCards. and T. Rowe Price. So that is financials for me. Real estate. Real estate is probably my smallest slice. I don't have a ton of companies in here, but they're good, solid payers in general. Obviously, Simon had some issues with the pandemic, but overall, they're probably the best in breed for malls. They are a smaller percentage overall of this slice, but I do think real estate, these are all REITs, so the the payouts are pretty good, and I think it's good to have a healthy portion of your income coming in through, of a dividend portfolio coming in through real estate, which, if you see, right, my real estate is, what I have it at 10 or 11%, 11% of my overall pie. If you go back to the S&P, right, real estate for them is 2.4%. So, just another difference between the two, why I make my own. And the last but not least is basic materials. Here you'll find some chemical companies, some mining companies, Chevron, right, oil, and Phillips. So, basic building blocks of other things. Also doing pretty well for me right now, though I have them at a smallest percentage of the overall pie, simply because it's a business that's boom and bust, right? It'll do really well for a while, and then it'll go down for a while. So the dividends aren't as stable as some other sectors. So I don't want to have that be the main driver of the account, of the portfolio, because you'll see more wild swings in your dividend income, and I would like to see steady growth instead. But yeah, that's just the general quick overview of the different slices and an overall reveal of the dividend and dividend growth portfolio. I can get into much more detail in future videos, but I think this video is probably long enough.